Annual inflation rises, pushing out the timeline for interest rate cuts. Anglo-American ends talks with BHP over a $75 billion bid, and expect the cost of your OJ in the morning to jump with orange juice prices doubling in a year. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Thursday, the 30th of May, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, we'll get to our interview in a moment because it's all about the main story today. Inflation is no longer falling, suggesting that any cut in interest rates is a long way off.
Annual inflation for the 12 months to the end of April stepped up to 3.6% from 3.5% the previous month, according to the Australian Bureau of Statistics. Housing costs and fruit and vegetable prices rose, the latter due to bad weather. Also, the figure includes the annual increase in health insurance premiums. Other items to jump sharply include postal services, tobacco, and sports participation and services. Perhaps most concerning is that the trimmed mean measure, which takes out some of the more volatile items like fruit and veggies, ticked up to 4.1%. While the reading yesterday is monthly and not anywhere near as comprehensive as a quarterly figure, the trend is not the Reserve Bank's friend in this case. Inflation, at best, is flatlining. Monthly figures are always taken with a degree of caution. However, they do suggest that headline inflation is entrenched around 3.5%, underlying inflation around 4%, both well above the central bank's target range of 2 to 3%. The central bank has previously said it doesn't expect to see inflation back in its target range until later next year, but there is no way they'll be happy with the flatlining that's going on now.
It always amazes me how specific some of the data is that goes into this in terms of, I understand obviously about kind of the increase in health insurance premiums. That's kind of a big ticket kind of thing. But then to get as kind of specific as sports participation and postal services and things, to actually notice the price rises in there and to kind of feed all of that in to this overall number.
Yeah, it's pretty incredible. I mean, great detail.
What does all that detail mean, though? I mean, really back to self-interest here, Sean. What does it mean for interest rates?
Those wanting a rate cut this year are probably disappointed this morning. The Reserve Bank minutes of its last board meeting show that the central bank discussed lifting rates, and yesterday's number would have added some vigour to that discussion if it had come out ahead of that meeting. As I mentioned yesterday, the X factor in all this is the stage 3 tax cuts. People will have more take-home pay in a month's time, and it's unclear what they're going to do with it. If they rush out and spend it all rather than paying down debt or saving, it will definitely be inflationary, and that will keep interest rates higher for longer. In any case, with inflation, or at least the monthly inflation reading coming in at 3.6%, there is no way the Reserve Bank will cut rates for some time. In fact, most economists are now thinking about early next year as when the Reserve Bank will next move on rates, and most of them, not all of them, most of them are saying it will be down.
You know who has a good take on this one, Sean?
Well, Sherelle Murphy, I would say, from EY.
You are exactly right. Coincidentally, Sherelle Murphy, Chief Economist at EY, is your guest today for the Fear and Greed Daily interview. Stick around after the show because you get stuck into this whole big question of what's going to happen to interest rates.
Yeah, sure do. Definitely check out the interview. Sherelle, a former Reserve banker herself, very tapped into what's going to happen. So it's well worth a listen.
Yeah, it certainly is. It's coming up after the show, so stick around for that one. Local markets, Sean, how did they perform yesterday?
And the inflation figures did little for the market, with the S&P ASX 200 closing down 1.3% to 7,666 points. It's the lowest close in 3 weeks. The inflation figures didn't help, but actually the market was much lower ahead of the 11:30 a.m. announcement. That was pretty much on the back of renewed talk of interest rates staying higher for longer in the US. Wasn't much to like on the ASX yesterday, Michael. All 11 sub-indices fell. Around 3/4 of all stocks ended lower, and those sub-indices fell by quite a bit. Consumer staples was down more than 2%. The best of the sub-indices was tech. It was down 0.5%. Among the large caps, Fortescue Metals fell more than 3.5%. Rio Tinto dropped about 1.5%. After the price of iron ore came off, all the banks were lower, with Westpac and ANZ off more than 2%. Telstra was down 1.7%, and Aristocrat Leisure dropped nearly 3%. Bit of corporate news around, Michael. News Corp unveiled a major restructure, leaving the group with 3 publishing units and a sales unit. The goal is to find $65 million in savings. this and next financial years. Healthcare company Fisher & Paykel expects net profit after tax in fiscal 2025 to bounce back after a disappointing 2024 due to three abnormal items. Its share price was up more than 4% yesterday, the best of the top 200. The worst was new in pharmaceuticals. It tumbled 9%. Now, remember a week ago it came out, said good phase 2 trials for its Pitt Hopkins drug. Well, all those gains from last week have now been retraced.
Okay, so a big day locally. What about international markets?
The International Monetary Fund came out and said it expects China's economy to grow 5% this year, upping its forecast from 4.6%. That reflects a solid start to 2024 and more promised support from Beijing. Now, China's targeting growth of around 5%. In the March quarter, the pace of growth was running at about a 5.3% level. That should really be good news for the global economy and particularly for Australia since they buy so much of the stuff we dig out of the ground. Though I've got to say most investors right now are focused on US inflation figures due out in the next 48 hours. Ahead of that data, the mood turned a bit sour on Wall Street. That means that people think that rates in the US may stay higher for longer. I mean, it's a guessing game. It changes every week, really. Anyway, investors pushed the US dollar higher as a result and the Aussie dollar lower on the belief that those rates will stay higher in the United States. Gold prices also rose. Oil prices jumped on the back of a flare-up in tensions in the Middle East. There was a vessel attack in the Red Sea. Of course, we've also had Israeli tanks reaching the centre of Rafah.
All right, we'll be back in a moment with the rest of the day's business news. Sean, BHP and Anglo-American have failed to reach agreement over the terms of a $75 billion takeover offer, with the structure of the deal really the sticking point here. BHP asked for more time, but Anglo rejected the request, meaning no deal for at least 6 months.
That's right, Michael. Last week, Anglo-American rejected BHP's third offer, but granted the big Australian another 7 days to negotiate after being pressured by some of its largest shareholders. That deadline was 2 a.m. this morning, and under the UK's put up or shut up laws, BHP had to announce a firm intention to make an offer or announce that it didn't intend to make an offer. Hours before the deadline, BHP had requested another week extension. A couple of hours later, Anglo-American said no. Said BHP hadn't addressed fundamental concerns over the previous week, so it wasn't going to extend that deadline. BHP effectively had 6 hours to make a bid. That didn't happen. The sticking point was BHP's insistence that Anglo sell 2 of its South African assets before the deal went ahead. The prize in all of this for BHP was supposed to be copper. A successful bid would have made BHP the biggest copper producer in the world. Now BHP must wait 6 months before bidding again, and that leaves the door open for another bidder, maybe someone like Rio Tinto. They could well emerge. Very interesting corporate manoeuvring over the past 24 hours or so, Michael.
There has been so much theatre and so much drama with all of this, and now, Sean, you are dangling this in front of us, the fact that there could be another suitor here, say Rio Tinto, just sneakily coming out going, BHP, you're frozen out for 6 months. Now it's our turn.
Well, what this process has done is show the price that Anglo-American shareholders are prepared to pay, because the price was okay. And the sticking point is the structure, so these assets in South Africa. So a new bidder knows exactly what they have to pay and what they have to do to get Anglo-American. So there is the potential here that BHP has done the work for another third party to come over the top.
That is amazing. Do you remember that TV show Deal or No Deal?
Oh, here we go. Yes, no, this is big, possibly the biggest deal ever on the ASX, and we're on to Deal and No Deal. Yes, I do remember it.
Oh, tremendous theatre. And it feels like this is what we're in right now, except instead of kind of $1,000 in the briefcase or kind of $1 in the briefcase, we're dealing with $75 billion and the potential to be the biggest copper producer in the world. The stakes are slightly higher.
Yeah, slightly higher.
This is an amazing story. Anyway, we'll see how this plays out. Sean, Federal Treasurer Jim Chalmers is decidedly cool on Industry Minister Ed Husic's calls for a lower corporate tax rate, saying the government is already doing enough to encourage investment.
Now, Mr. Husic called for a lower corporate tax rate either by cutting it or through using other incentives such as an investment allowance. It's a significant shift in policy, if it is one, because in opposition, Labor generally fought against lower taxes for companies. Yesterday, when asked about the comments, Dr. Chalmers said production tax credits for critical minerals refining and hydrogen production introduced in the May budget are an example of the government using the tax system to encourage investment. And that's it. He said no more. Clearly not interested in lowering the corporate tax rate.
Can you imagine the phone calls that would have been happening behind the scenes?
Ed,
Ed, what have you said?
oh,
God.
Ed, I thought we talked about this.
Pull your head in, Ed. Yeah,
Well,
that
yeah.
kind of thing.
Head in, Ed. Go on.
Sean, moving on, but still staying in politics, really. Prime Minister Anthony Albanese says the government will reissue a revised order to replace Direction 99 to ensure that the protection of the community outweighs any other consideration.
Yeah, so it comes after the order allowed non-citizen criminals to remain in the country. Direction 99 says significant weight must be given to a person's ties to Australia. So a New Zealander, for example, who's lived most of their life in Australia, might be allowed to stay, even if they're a criminal. The government has come under fire for that, particularly Immigration Minister Andrew Giles, someone who the Prime Minister Anthony Albanese supported yesterday. The government's also abolished the Administrative Appeals Tribunal, which has been following Direction 99 when releasing criminals into the community. So the tribunal's done the right thing, but that's now been abolished. The Direction 99 has been reweighted. So it's not about the person's ties to Australia. The community protection outweighs all other considerations.
And also in politics, a slightly more positive one, this one, Sean. The Governor-General designate, Sam Mostyn, was due to meet King Charles overnight.
Ms Mostyn becomes the monarch's representative on 1 July, and ahead of that was expected in Buckingham Palace overnight. Apparently, outgoing Governor-General David Hurley will have one last meeting with the King in July. I didn't really ever think about meeting Queen Elizabeth II. I'm sure it would have been a wonderful experience. I would love to meet King Charles III.
Would you?
Yeah.
Would you really?
Yeah. He's like our wacky king, and I just think that's fantastic. If I want a king that is not vanilla, and he is not vanilla.
You know what? It feels like if you were meeting the late Queen, you could kind of say all kinds of things and she just wouldn't give you anything. She'd just be like, oh, yes, that's nice, that kind of thing. If you were to say something to King Charles, he'll tell you exactly what he thinks.
So I've told you the story of Sean Turnell, a friend of mine who was in Myanmar and in jail there for 500 days or something or other, and he was let out last year. Mm-hmm. He went and met King Charles. King Charles asked to meet him. So he flew over to Buckingham Palace and he said he was a really nice fella. He said and very, very candid in what he said.
That is great. I can see why you might want to meet him because that would actually be, again, plenty of theatre, Sean.
Yes. Now, I'd like to say Sean didn't actually tell me too much of what he actually said because there's a certain protocol around that, of course.
But just enough to know that, you want to try and get a meeting if you can.
I'm hoping. Fingers crossed.
Yeah. All right. Now, Lend-Lease has struck a deal to sell its US construction business 3 days after unveiling a $4.5 billion plan to pull back from its offshore operations to focus on Australia instead.
It has agreed terms with a major US construction firm, Consigli Construction, for the sale of its US East Coast construction operations. Under the terms of the deal, Consigli will acquire around 45 current under contract and pre-construction projects. As part of the sale, the majority of Lend-Lease's US construction workforce will transition to that company, Consigli. Lend-Lease isn't disclosing the value of the deal, but it has previously said it expects to write down $1.5 billion across all its operations internationally as it divests that business. Lend-Lease's share price closed down 2.4% yesterday.
Finally, Sean, before we get to international news, how about this one? Insurance group IAG allegedly hit loyal customers with higher prices via a pricing algorithm, according to claims that have been filed by class action legal firm Slater & Gordon.
Slater & Gordon have claimed IAG engaged in unfair tactics and misleading conduct in selling home insurance policies. Now, IAG totally refutes the allegations, so they haven't been tested. The lawsuit alleges that IAG's algorithm modelling estimated the likelihood of existing customers renewing and the price at which they would probably accept an offer, according to the Financial Review. It incorporated how long customers had held policies and how many policies they had. According to the lawsuit, some customers were then hit with a loyalty uplift in pricing that was greater than any subsequent loyalty discount. The claim mimics earlier action from the Australian Securities and Investments Commission against IAG on exactly the same issue. IAG is also battling a shareholder class action about disclosure of COVID-19 related problems with business insurance. It's got a fair bit going on, that company.
Yeah, it certainly does. Toyota has unveiled plans for a new generation of internal combustion engines, betting on a continued need for older technologies even as car buyers shift towards electric vehicle makers.
In a very rare joint appearance, the heads of Toyota, Mazda and Subaru pledged to continue investing in fuel-based technology, a move that would also benefit hundreds of suppliers struggling with the shift to electric vehicles, according to the Financial Times. Toyota's chief executive, Koji Sato, said that engines are designed to be used alongside batteries in hybrid vehicles. Toyota's commitment to internal combustion engine technology comes as sales of fully electric vehicles have slowed due to concerns about costs and insufficient charging networks. That's led to a boom in demand for hybrids, of which, particularly in Australia here, Toyota is the market leader. Toyota said earlier in the week its new engines should go into production around the time that updated EU emission regulations are due to be phased in from the end of 2026. So that's the other overriding. Lots of regulation change in Europe and to some extent North America. So these engines need to fit into that regulatory change. But once again, it's a sign that the car makers reckon the future is hybrid more so than electric.
This is very much aligned with what you were talking to Trent Nikolic from drive.com.au a couple of weeks ago. Great interview. Definitely worth going back and having a listen to that one, because at the time that you spoke to him, he was doing a lap of the map. He was heading around Australia in an EV, just basically to almost prove the point that really we are not equipped for this, and maybe the future is in fact hybrids, at least for now.
I'm sold.
Yeah, it was a really good interview. I might put a link in today's show notes as well. Sean, last week we talked about fears of an outbreak of bird flu after one case in a human and one in a chicken was discovered in Australia. Now in Iowa in the US, the deadly bird flu was detected in an egg-laying chicken flock, affecting 4.2 million birds.
Yeah, it's the biggest outbreak since 2022. Iowa is the largest egg producer in the US. Nearly 12% of the country's egg-laying hens are there, according to the US Department of Agriculture. In the last large-scale outbreak, which was March 2022, it affected 5 million birds directly, but it actually resulted in the slaughter of tens of millions of birds and also a surge in the price of eggs. That's a worry. The virus has now moved to dairy cattle, according to Bloomberg. That's prompted dairy farmers in the US to seek compensation for milk losses. So far, Australia is the only continent that hasn't really been affected by an outbreak of bird flu, even though we've had sporadic cases. We need to keep it that way.
Finally, Sean, I mentioned this one at the top of the show. There is a crisis in the world of oranges, with juice prices hitting record highs driven by bad weather and disease in Brazil, which is the world's largest exporter.
It is so bad, Michael, that manufacturers are looking at using mandarins to make orange juice. Do you remember the great crisis? I think it was McDonald's, but it could have been KFC.
It was KFC. I know where you're going with this.
And they decided, because the iceberg lettuce price had gone through the roof because of the floods up north in Queensland, and they decided to use cabbage instead.
That's right. I think lettuces hit $10 each, and KFC and others just said, nope, can't do this. We'll replace it with cabbage and no one will notice. Do you reckon, Sean, anyone will notice if you swap out oranges for mandarins?
Nah. I actually don't like orange juice.
Oh my God, every day I find out about a new thing that you don't like.
To be honest, Jackie was listening to the show yesterday morning. She rang me on her way to work and said, "You said you don't like chocolate. That's a lie. You're fibbing." I'm like, dark chocolate?
You were busted.
I was busted somewhat.
So orange juice, if they swap it for mandarin, becomes mandarin juice.
Yes.
You're not going to care.
I couldn't give two hoots.
Well, I tell you what, it will not fly in our household.
Well, orange juice futures, basically they allow industry players to insure against swings in prices. Futures, the cost of that insurance effectively have been rising since the end of 2022. There's a hurricane and a cold snap devastated acres of orange groves in Florida, which is the main growing region in the US. The US is the second biggest producer of orange juice. The rally has accelerated this month as the prospect of a dismal harvest in Brazil has panicked the market, according to the FT. Now, Brazil exports about 80% of the orange juice market. That's different to the orange market, so we just have to make that distinction. 80% of the AJ market. There you go. Orange juice futures are currently twice the price of a year ago.
See, I find this very interesting, and I feel like I've learned a
So
lot. But it also feels as though your heart's not in it because you've declared that you hate orange juice, and now you're just kind of...
Yeah, but I buy the, I do the groceries.
Oh, that's right.
We have 8 people in this house.
Golly. Okay. All right. Maybe it will affect you. Okay.
Mhm.
All is forgiven. Sean, up next is the Fear and Greed Daily Interview. You are speaking today with Sherelle Murphy, Chief Economist at EY.
I sure am all about yesterday's inflation figures and what it means for interest rates. News ain't good, guys.
It's a very interesting interview. Sherelle is a great communicator. Up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au, which, Sean, is also where you can sign up for the Fear and Greed weekly newsletter, which went down very, very well yesterday when it came out, and full of your opinions and some really quite spicy takes on a few different topics.
I must say, I've changed my mind on the Reserve Bank. I've always been a great supporter of the Reserve Bank. I worked there and I think they've done an amazing job over a long time. I'm just starting to shift a bit on that one.
Yeah, you really got stuck in. It was great. So make sure you sign up now for next week. And so when Sean kind of rips into another institution, you hear it first. Thank you very much, Sean.
Thank you, Michael.
It's Thursday, the 30th of May, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.